So can you see everything? I have a very large screen. I have a 4K monitor.
Oh,
So,
nice. Okay, yeah, I can see everything perfectly.
yeah, so you see my chart, right? Okay.
Yes.
So we'll just get rid of all the drawings right now. So this is the Aussie JPY. And
Okay, hold on. Before you get started, I am recording this. So before you get started into charts and stuff like that, I want to get you what your philosophy is of technical analysis. I want to understand your mindset.
okay.
So, I mean, there's fundamental analysis and there's technical analysis. And I'm guessing here, but you can correct me if I'm wrong, that you're really just a technical analyst and you're not looking at the fundamental stuff at all.
Not really. No. If I had to choose between, price and fundamentals, and someone said, well, you have to pick one. You can't see one or the other, right? I would always choose price.
Okay.
Open high, low, close.
Okay. So you're only looking at price. You're not looking, if you're doing cryptocurrency, you don't really care how many partnerships XRP has or how quick the Lightning Network is for Bitcoin or anything that has to do with the fundamental picture of that cryptocurrency or that trading pair. Correct. You're only looking at price action.
That's right.
Okay.
This is my a saying I like. I don't know if you can see me typing this, if I can type right. But price is everything.
Gotcha.
Because price. The reason why I say price is everything is because for instance, if you go back and you look at every single major move in any market, right? So let's take the pound, for instance, right? When the pound fell. What was it, back in 2013, or was it 2014, I think, the pound had a really big sell-off. And I went in.
That was probably at Brexit. That was probably Brexit then.
Yeah, I think it was before Brexit. Brexit was the second one. I think it might have, I can't remember, but all I know is it was when they unpegged the Swissy from the euro. I remember that.
Okay.
So when that happened, man, everything just went crazy. The pound, what was interesting is the preceding price action that led up to that. It was almost like, in a sense, a crystal ball. It was like the price, you could see the intention of what was going to happen, right? And it was just, so we were like, well, was it the news event or was it price? And that's the thing that I've always said to myself. Well, I just say, well, because price came before the news event, you could just see the intentions or the psychology, I guess you can, if you will, setting up ahead of time, and I just thought that was rather interesting. But
Thomas Bulkowski, who is one of my favorite technical analysts, he wrote the Encyclopedia of Chart Patterns, stated that there are people who do fundamental analysis and there are people who do technical analysis, and he said that technical analysis, or what you call price analysis, already incorporates and includes the fundamental analysis because it's the smart money. It's what the smart money is doing.
Right.
I think that was a pretty good way of putting it. And it sounds like he's very much, or you're very much in line with that.
Yeah. I mean, it's just, I just like looking at the price and open, high, low, close, and yeah, absolutely.
Okay. And I apologize for interrupting you in the middle of your sentences, but I know that if I don't, I'm not going to be able to get a question in.
So, no, it's all right, dude.
I know you so well. We've been friends for like 15 years at least, and I just 20 years actually. And I just want to be able to interject because I want to understand everything that you have learned to date. Because from the things that you told me over the last several months, and really since last year, but especially over the last several months, has been really spot on. And I think you've got a fantastic mind for price action, and I really want to be able to pick that. So, all right. So, so your philosophy is price is everything. Price is everything.
Right.
What is WRB? WRAB?
These are things that we can cover in, as we talk about this. I just thought this was a really good example. I think one of the best ways to start is first to let you just ask the most pressing question that you would have. I mean, what's the most pressing question you have about, when I share a chart or any of the elements of what I talk about? I mean, there's usually like, man, I got this pressing question, and maybe you don't.
Well, I do actually have one pressing question, and that has more to do with cryptocurrencies than other markets. But one of the things that I think a lot of people have on their mind is, and one of the things that has really gone into a lot of the videos and a lot of the YouTube stuff regarding cryptocurrencies that is very, very different than like Forex trading or stock trading and things like that, is that they're always focused on these fundamentals that, XRP has all these partnerships. How come the price isn't going up? Bitcoin has a Lightning Network. How come the price isn't going up? How come we get these sell-offs that are so quick and fast, and then, it knocks people out of their positions? And so is the cryptocurrency market, in your opinion, different than Forex or stock trading, or is everything still just price action to you?
Yeah, so let's just with the cryptocurrency markets, I mean, it behaves a lot like Forex in many regards, futures, or like you said, commodities, right? I mean, I still see the same elements in the price, like the Wyckoff method, right? Where you get a consolidated area where price begins to accumulate, and then there's a spring, right? So there's a run below the consolidation in a bullish condition, right? And then there's an expansion, right, and a markup, and then basically taking what was accumulated and distributing it at a higher price.
Okay, right? Before you get into any kind of technical details at all, I just want to clarify that. See, what happens is when people watch these YouTube videos, especially when it comes to cryptocurrency, you don't see that in Forex, and you don't see it in stock charts. Oh, you might see a little bit in stock charts, but especially in cryptocurrencies, people get excited about cryptocurrency markets. And so what happens is a lot of people end up buying as the price is like shooting up really, really high. And so you get this FOMO, what they call fear of missing out.
Right.
And I think they tend to be more emotional, maybe because it's a younger, maybe younger demographic of people who are into cryptocurrencies than stocks or Forex. Well, there's a lot of young guys in Forex too, but I think they tend to be more emotional. What is your position? What is your opinion about emotions in trading?
Well, you can see it in the chart, and so I mean that's all I really try to look for is FOMO. So if price is moving, so like for example, right? So when you see, I mean, if you don't mind me looking at a chart, or because I go to the charts. Like for instance, is this FOMO? What is this, right? I mean, this is the U.S. dollar on the 4-hour chart. It's really interesting how you see the price. It moves up impulsively into a consolidation, then it moves out impulsively, right? So
what you're saying is that the emotions of traders is reflected in the charts.
Yeah, I mean, it's
how do you manage your own emotions though when it comes to trading?
Well, that's kind of that is a how do I manage my own emotions? It's a very good question.
So do you get excited when price goes in your favor? Do you get discouraged when prices move against you? How do you see? I think this is a problem that the reason I'm asking this is I think a lot of professional traders eliminate emotion completely. And those who are less professional, those are considered to be typically retail traders or amateur traders who are beginning traders, tend to get emotional about their trades.
Right.
And that, I think that is almost like in addition to the technical analysis, the price action. Because when you see prices go up, you tend to have this emotional reaction. Oh, wow, this is great. But then they don't take profits when they have profits, and they let those profits fade away. Right. Or prices are going down so much and they're losing so much money they don't take it. They don't get to hit the stop loss. They don't take that loss at an early stage, and they let those losses run.
Right. Yep. Yeah. So I take advice from Jack Swagger, where he basically, in his interviews with traders, he put it this way. He says, when he talked to professional traders, they always knew where they were going to get out before they got in. And so I think that that's important, that you look at what you're trading and saying, okay, I'm looking to take a trade here. So where am I going to get out? Right. You just can't just haphazardly go into the market and say, okay, I think that the price is going up, or I think the price is going down. Well, that's okay. That's if, right. So you need these if and, right. So if this happens, then if, then, and, right. So that's kind of the easy way to put it, right? If this happens, then I'll do this, right? So you need to know what you're going to do. And I think that, I don't think you can actually get rid of emotions altogether, because we, have the brain that we have, and we have a nervous system, right? I think it should get to a point to where you're like, I've seen this a million times before, right? And it's like, so if I see this, then just generally happens, right? And then you just, and then, so as far as managing emotions, right, I think it's important to, not be neurotic and impulsive, just in general as a human being, right? So this is why I say trading is probably one of the hardest things to master, because, you can make a lot of money and you can also lose a lot of money. And if you don't know how to operate in an environment like that, and we live in a society that doesn't necessarily teach people how to operate in an environment like that, you're just going to pretty much become part of the 90% or the 95% of people who don't make money in the markets.
Right.
So it's basically, you could be a master price reader, and I know of one individual such as myself who's a master price reader. I like to say, oh, I'm a master because I got 10,000 hours of screen time. But you know what? It doesn't make any difference if you don't have the right belief about risk. I know that the late Michael Douglas has something to say about that in his book, Trading in the Zone, that it's a belief, right? And so, it's like people that are, it's so just to kind of just offer one statement about this. How do I manage my emotions? It's like, well, I I meditate. I wake up in the morning and I try to practice it on a daily basis, and I try to and it's basically a brain exercise, and it's a practice in being aware and mindful of the behaviors that sabotage you, and that takes practice because they can sneak up on you and hijack you. So
okay, I think that's good advice. I think that's very good advice. Be mindful if and then, and have a game plan going in, basically.
Sure. Yeah.
Exactly.
And again, too, you can have this really, just well-critiqued plan, right? Rules-based plan. But if you don't have the right belief about risk, you're gonna completely circumvent that plan when the moment the subconscious mind is when it's provoked.
Right.
So so the fear of losing is actually twice as strong as the fear as the exhilaration of winning. So right there, that ought to tell you right away. It's like there's a side of your brain that has over 50 million years of evolution behind it that you're not just going to will away, right? And that's what one particular individual who studies traders found with traders is like this. There's more to this, right? You need to learn a lot. You need to understand how your brain works. I think that's important too. So you basically spend a lot of time. You'll spend time mastering your method, and then the rest of the time is spent mastering yourself.
Interesting. Yeah, I think that's absolutely true. I think that there's a very, very big part of trading is managing your mindset.
Right.
And being in the right mindset and not letting those losses run too far, and not letting the winners, get you too excited, but having a balance there. And I think your idea of meditation actually is probably very helpful, probably helpful for everybody to do and practice on a regular basis. All right, beautiful. Yeah, that's I like to get that out of the way in the beginning because I think there's a lot of misconception in the marketplace. If they knew the technical analysis, they can be successful. But if they
Hmm.
don't manage their emotions, if people don't manage their emotions or their mindset, then they're just going to continue to do. They're going to be in that 95% that lose. They're going to be in that category of people lose. You have to have a good mindset, and you have to have the technical analysis now. So,
Right.
yeah, okay, great, awesome, and that's pretty much my experience over 40 years of trading.
Hmm.
Exactly.